There's a trade war, there's a technology war, there's a geopolitical influence war, there's a capital war, and then there's a military war. The first types of conflicts or wars we are in now with China. I think we're at risk of a war with China.
Hey everyone, and welcome back to another video. Today's video, we've got a very special one for you. Ray Dalio finally sat down and did a very, very long interview for the first time in a really long time. And for some reason, this interview was done on Instagram, so the video's a little bit strange. It's not, I couldn't just get the video off YouTube this time, but I mean, I haven't actually tried to download it yet, so I don't really know how that's gonna turn out, but I guess you'll find out in today's video. But there's a ton of things that he covered in today's video that I think were really valuable around what is happening in the world at the moment, what he sees happening in the markets, and some other things that he spoke about that were actually not even related to investing that I think are really, really important for everybody to hear. So without further ado, let's get straight into some of these clips from this video. If you do get some value out of these videos, they take a long time to put together, so I very much appreciate it if you take the 2 seconds to leave a like on the video and hit that subscribe button if you want to stay up to date with content that I post in the future. But with that said, let's jump into the video. At the moment, Ray Dalio is doing somewhat of a tour for his new book that he released, which is called Principles for Dealing with the Changing World Order: Why Nations Succeed and Fail. I think Ray Dalio needs someone to tell him not to name the title of his book that long, because that's an absolute mouthful. But he's basically going around and promoting his new book, so hopefully that means we'll get some more interviews from him maybe over the next few weeks or the next month or so. But in this interview, he started by talking about what are some of the major themes and factors that he talks about in the book, things that are affecting the economy as we see it right now.
The three things that go together to make the big picture that are happening now and happened repeatedly are financial. They're about financial, internal order and disorder, and external order and disorder.
So here Ray Dalio is talking about the big takeaway from the book, which is that there's three major factors that are driving what we're seeing right now. One being financial, one being an internal order disorder or an internal conflict, and then also an external conflict. He starts by explaining each of these major factors and how they kind of come together to explain the risks and the uncertainty that we're seeing currently in the economy. The first that he goes through is this finance risk, and this really all starts because at the moment and for quite a while now, we have had interest rates that have either been very, very low and now they're at absolutely rock bottom zero.
When they're spending a lot more money than you have, and you have a lot of debt, and you have to print a lot of money, that has an effect on those currencies because there's not a lot of money and you don't get richer by printing a lot of money. You cause inflations in assets and goods and services. So that's number one.
And what happens when it is basically free to get access to capital, and it's a little bit more for the average individual. You know, you still see a mortgage rate that will be maybe in the 4% range, but for banks, it is basically zero at the moment. And what that means is that people are spending more money than what they are actually producing, right? Debt is kind of an amplifier. It allows people to spend more money than they actually have. And of course, there has to be a payback on that at some point in the future. Whenever we're looking at businesses that are taking on large amounts of debt now, I always like to think of it as if the business is simply bringing forward future income to today, right? If you think of a business that takes on, let's say, $10 billion of debt, and let's say they use it to pay a dividend or do share repurchases, something that Starbucks, for example, has done a lot of. You can think of that $10 billion in debt that now sits on the balance sheet as simply profit from the future that has been brought forward. Because what it essentially means is that at some point in the future, maybe it's not tomorrow, maybe it's not next year, maybe it's not even in 10 years, but at some point in the future, Starbucks, for example, will have to take some of the profit they produce from the business and use it to pay down that debt. And that means that when they're getting access to their capital today, they're essentially borrowing from their future self. And when, of course, businesses and individuals are unable to pay their debts when that time comes, and if they have too much debt and they can't pay it, then they will go into default, right? Either if you're an individual or you're a business. But when it comes to the US government, because this debt is in US dollars, they can do something else. They're not going to default. What they actually end up doing instead is they simply devalue the currency, essentially through the money printing process, which is not strictly actually printing money, but that's essentially what is happening, allowing them to get access to cheap debt that covers their old debt and allow them to continue to fuel their excess spending. And the process, all of that leads to the devaluing of the currency. The second factor is the internal order and disorder, or the internal conflict that is going on in the United States at the moment. And really it's going on in a lot of places. And that conflict comes in terms of politics. So at the moment, in the US, for example, they are currently seeing the largest political gap between the two parties, between liberals or progressives and conservatives, the largest gap that has ever been there since 1900.
The second is the internal conflict issue. We have a type of internal conflict and a magnitude of internal conflict that is greater than at any time since 1900. And what you can see is that the political gap and the internal conflicts in that way is greater than before. Now that has a big implication.
And you might be wondering, how can you actually measure that? Isn't that a subjective thing, how far apart the two parties are, whether they've got similar policies or whether they're really, far apart and they're really disagreeing with each other? Well, in of itself, yes, that would be subjective, but there's actually some measures that you can use in order to see this at a data level. And one of them that Ray Dalio includes in his book is taking a look at what percentage of people in Congress are voting along party lines. So of course, the two parties, or people in Congress representing the two parties, of course, most of the time, always, they will mostly be voting with their party on certain issues, right? But in circumstances where the two parties are very similar, or they have significant overlap in their views, they will have a lower percentage. Maybe it's 60% or 70% that is votes with their party, and there will be a large percentage, maybe 20, 30, 40%, where they are voting with the other party because the two parties are relatively similar. For example, in the 1980s, the two parties, the Democrats and Republicans in the US, 85% of the time their votes were along party lines. Now, if you compare that to today, we're looking at 96%. That basically means that it's almost never when a congressperson from the Democrats, for example, votes with Republicans or vice versa. Almost never. It's what? 1 in 20. And of course, we can chart that over time, and you can see that there's been a consistent increase in this figure for a very, very long time, showing that the two political parties are widening on their beliefs.
Let's call it the capitalists and the socialists. But it also has to do with order and conflict and how we will have elections and whether we might have a big conflict, whether the system is the means by which that operates. So one principle I learned by doing that was that when history has shown, when the causes that people are behind are more important to them than the system is in jeopardy.
And then the third factor, so we have the finance issue or finance conflict, we have the internal conflict, then we have an external conflict. So conflict between the United States and another nation. At the moment, that is the rising power in China.
And the third is when there's the rise of a great power to challenge the existing great power and the existing world order. That happened in all those cycles, and it's happening now. There's a rise of China to become a competitor and good possibility of being significantly stronger because there are 4 times as many people. So if it has half the per capita income, it'll have twice the amount of wealth and net power.
Here, Ray Dalio talks about the fact that there is a good chance that China will become stronger and more powerful than the United States. And that's simply because they have 4 times, a little bit over 4 times, the population of the United States. So for example, I think Ray Dalio uses this example. If per capita GDP in China was half of the US. So per person, if the GDP was half, they would still be twice as big. So there is an extremely likely chance that at some point in the future, if China continues with the way that they've been going with policy, which is to be a little bit more lenient on the capitalist business side, moving out of pure communism, if they continue to do that, then they will continue to grow, they will continue to pull people out of poverty, and their GDP per capita will increase, and eventually it's very likely they will become larger than the United States and become the world's power.
So when those three things happen at the same time, it's a risky period. Now, I'm a very practical man. I'm not ideological. It's just mechanics. So that's why by looking at the cause-effect relationships, by seeing many cases, I just wanted to convey that and also convey about what that means for us.
He talks a little bit about how the last time we saw this kind of crazy combination was back in the 1930s and 40s. So the finance conflict was, they were just coming out of the Great Depression and dealing with the aftermath of that, as well as a change in their monetary system. Again, there was large political gaps within the country. So that was their internal conflict. And then the external conflict was there was a rising power in Japan. And the scary thing about hearing Ray talk about those three factors back then is I think we all know how that ended, especially between the US and Japan, with what started out as a trade war and eventually turned into a full-on military war. But it's certainly something to think about, and it also should bring you down to earth and realize that there are real big problems going on, not just in the US, but globally at the moment, things that could significantly impact the economy in the United States, things that could impact your investments. So while everything really feels nice and frothy at the moment, stocks have, I keep looking at stock charts and they're up 100% over the past year, which is just insane. Things are feeling really, really good at the moment. We're kind of in that feel-good moment. We need to recognize that, that kind of sugar high is not going to last forever. And speaking of that sugar high, Ray Dalio specifically answered a question around what he sees coming next for the economy.
A lot of money was put out there, sent in the form of checks and so on. I'm not saying that money wasn't needed or used for good causes. I'm not commenting on that. But a lot of money was. And that's created a high. And that high hasn't yet really fully manifested itself in inflation. Think about it this way. If you produce more money and credit than you produce goods, if you produce more buying power, then you're going to have more money chasing those goods, and that makes for a higher level of inflation. So we're in a very relatively good moment now because people are now just starting to feel the inflation, but they got the checks and they feel richer. But that won't last till 2024.
He essentially spoke about that last year there was big amounts of stimulus given out and that, it was necessary, or that, he doesn't know either way whether it doesn't really matter whether it was necessary or not. But the fact is that we're currently on this sugar high of stimulus that has come in, and we have not yet seen the full impact of inflation. He still believes there is more inflation to come, and that we're going to continue to see it rise, and that, as I said, right now we're kind of in a sweet spot where we haven't yet felt the negative effects of doing massive amounts of stimulus, but that it can't go without consequence. So on that note, I'll leave it there for today. I hope you guys got some value out of today's video. If you did, I would very much appreciate it. Take the 2 seconds to leave a like on the video and hit subscribe if you want to stay up to date with content that I post in the future. But with that said, hope you guys have a great day, and I'll see you in the next video.